And here's Patrick to begin today's webinar.
Thank you very much, Illy, and we've got a good one today that's going to take a look at 2022. We're almost to the end of the first month, but we're going to be able to tell you what's coming in 2022 across 4 different practice areas within IT services and professional services. And to do that, we're going to have Elitsa Bekalova, who leads on our IT services benchmark, talk about the IT services space broadly. Kelly Lashifka, who leads on management consulting, she'll talk about what's happening in the consulting space. John Costas has been for a long time our lead analyst on the public sector IT services, and he'll talk about what's coming in that particular U.S. federal government focused area. And then Boz Christoph will wrap us up by looking at global delivery. Talent has been one of the most important issues in all of the last couple of years, and so Boz is kind of pulling a lot of the different threads together by talking about global delivery at the end. All of this is based on the predictions documents that you can see here that we released at the end of last year and at the beginning of this year. We do it every year. We take a look at the trends, we look at the data, and we talk to a lot of different companies to understand what they're thinking about as the year is coming along, or as the year is coming to an end and the next year is coming along. What are the trends that they think will continue? What are the things to keep a lookout for? Where do we expect the most disruption across the market? So with that, I will hand it over to Elitsa to start us off on IT services. Elitsa?
Thank you, Patrick. Before we begin with the actual predictions for 2022, I want to give you a view of the growth in 2021 and in the past few years in the IT services market broadly. This is a graph from TBR's IT services vendor benchmark that published early in January and includes revenues for 30 major IT services vendors. The unexpected lockdowns and uncertainty that the pandemic caused pressured IT services spending and led to a decline in IT services revenue in 2022 compared to 2020 compared to 2019. However, the pandemic actually acted as a catalyst for change, both for clients and for vendors, as they started to look for different ways to run their businesses in a challenging market environment. So establishing remote workforce models, improving communication and collaboration, making supply chains more resilient in the challenging market conditions, improving data security, shifting from traditional sales to online sales models are some of the examples that of client needs that emerged during 2020. The main lever that IT services vendors used to address those needs was technology. And notably, cloud and cybersecurity became the core enablers for digital transformation that was initiated in 2020 and then scaled significantly during 2021, leading to accelerated revenue growth. So during the first 9 months of 2021, many of the 30 vendors in the benchmark enhanced revenue growth. Now in January, vendors have started to report their 4Q21 results, and we're seeing positive revenue trends. So we have good confidence that revenue growth for 2021 will be at levels above revenue growth in the pre-pandemic times over the years. So as we move into 2022, revenues will be driven by a mix of 3 activities. The first are the short-term projects around operational resiliency and running businesses. The second are larger transformational engagements that enable clients to improve their business models. And the third are innovation engagements that allow clients to do something really completely different. And all those 3 activities are supported through technology solutions and services. Now, with the broader picture, let's move on to the next slide to take a look at the predictions for 2022. And we identified in our predictions special report, we identified 3 key topics that we cover. So the first topic is about people. IT services is really a people-oriented business, and human resources are the main levers for service delivery. So managing talent to address market demands really emerged as a leading challenge during the second half of 2021, and we expect this to continue during 2022. We're seeing increased hiring activity among IT services providers, to gain skills, often by poaching talent from competitors. On the other hand, cloud and software giants such as Amazon Web Services, Google, Microsoft, they are ramping up their recruiting activities for IT services talent to more aggressively and more effectively pursue IT services revenue that are attached to the cloud offerings that they provide. Also, the pandemic added virtual working arrangements and related risks, productivity questions, the topic of burnout, and also hesitation around returning to the workplace. So the list of factors drove an increase in employee attrition in 2021, and this trend will remain in terms of attrition rising in 2022. During 2022, we expect IT services vendors will better refine their talent attraction, training, and retention and promotion programs. For example, vendors will expand to more universities, develop apprenticeship programs, as well as target a broader geographic footprint, seeking new hires from outside the usual IT services talent hubs. IT services vendors will also make their employment packages more attractive, including improving compensation and training efforts so that they can fend off competition from hyperscalers and their IT services peers. By the beginning of 2023, TBR expects IT services vendors will shift their strategies to emphasizing margin improvement, and talent programs will gradually become a lower priority in corporate strategies. The second topic in our predictions is about sustainability. Our analysis is showing that sustainability as a subcategory of climate change presents a massive revenue opportunity for IT services vendors in the coming years, especially for the vendors that are focused on decarbonization. Reduced travel combined with interruptions in manufacturing drove a decrease in carbon emissions during the height of the pandemic. Additionally, enterprises in responding to clients, governments, and activists, and also investors and their own employees made really wide-ranging commitments around environmental, social, and governance goals. So we hear carbon neutral, net zero carbon footprint, and those statements can be interrupted in many ways, creating an opening for IT services vendors and consultancies to effectively help their clients define the metrics and goals in a manner that's really aligned with financial financial goals of the companies and their organizational needs. So we believe in 2022 it will be the year IT services vendors and consultancies are able to bring clarity to decarbonization. IT services vendors will assist clients in assessing, measuring, and reporting decarbonization efforts. Sustainability, specifically decarbonization, will be a new revenue stream for those IT services vendors that have clearly defined offerings, that have established specific measures that track progress, and also have well-branded and promoted decarbonization commitments internally that the vendors can use, that can show as use cases with customers. And the third topic is around blockchain and 5G. TBR expects blockchain and 5G adoption will increase in 2022 as IT services vendors unlock the use cases that resonate across financial services and manufacturing industries. In the IT services space, we see the late 2021 accelerations around decentralized finance and government-backed digital currencies as an opportunity that can drive acceleration of IT services vendors' blockchain initiatives. Additionally, the rather slow rollout of 5G, which is becoming now more powerful and less expensive, is setting up opportunities for IT services vendors in manufacturing broadly, but also in IoT-enhanced environments. So we believe that partnerships between IT services vendors and technology providers will be a key lever for increasing the value of solutions and expanding our portfolio and client reach in blockchain and 5G. Now I'd like to take a pause and turn it over to Kelly to talk about management consulting.
Thanks, Lisa. So looking at the graph on this slide here, we wanted to compare the management consulting revenue to the IT services revenue. The benchmark management consulting revenue growth remained higher than benchmark IT services revenue in 2022, and it's likely to continue into 2022. It remained higher in 2020, and it will likely remain higher in 2021. Looking at management consulting in particular, the growth did decelerate during 2020, but it's expected to return to almost pre-pandemic growth rates. So in 2019, it was around 7.4%. So we're looking to get pretty close to where we were a few years in pre-pandemic areas. As clients are looking to embrace a lot more of this technology solutions, technology consulting actually grew the fastest among the vendors when looking at the first half of 2021. Many of the vendors that had invested in that scale to kind of build out that technology alongside some of those strategy areas in the business transformation, they were able to more effectively implement services and solutions, leaning on a different mix of talent, which included data scientists, engineers, and just different specialists that were able to work with those traditional consulting groups to kind of pursue these different technology avenues, but while remaining focused around business processes and business challenges. Another group that was growing quickly during the quarter was organization and change. Clients were looking to a lot of the consultancies to kind of help them to change the way that their business operations were going. So looking at the talent and the structure of the talent to work better with the technologies and kind of shift the way that they were working, either with remote working or kind of reducing some of those underperforming units. It required an uplift of management consulting capabilities to make sure that the operations were maintained and the people were equipped to upkeep and continue working in those different ways, particularly as it relates to customer experience. While the pandemic adversely affected client spend as well as vendors' ability to deliver on some of these existing contracts, there were a few drivers that helped or created new avenues for vendors to work with their clients. Investment in both talent and expense lines to focus around some of these shifting areas and not just focusing on the traditional business consulting or strategy consulting. It was kind of shifting to work more closely with technology while also remaining loyal to their consulting assets. Business model shifts were also ongoing. It was business model including some of those restructuring or different talent leads to help move outside of those traditional consulting and kind of reposition. So there were some product-oriented business units that are definitely becoming more and more common, and they're growing in scale as well. There's also more of that design and engineering talent, as well as training to help create collaboration between those traditional services groups and consulting teams with the newer technology and design focused groups. So kind of ensuring that client discussions are supported through and the groups are able to work together to effectively communicate and make sure that the consulting side as well as the technology sides are addressed. A refocus around strategy and vision following this increase in adoption of technology and just different business modernization products to help clients achieve greater value as well as to create trust with their own customers, as well as make sure that they're trusted by the management consulting vendors are able to create trust with their clients, are helping the firms to better recover the ground that they may have lost during the pandemic, as well as move into these newer areas that they may not have even looked at a few years ago. One other area that was kind of a focus for the vendors was similar with the run the business and operational improvements. A lot of it tied back to strategy and business execution of some of the vendors, some of the clients had kind of redefined where they were looking to go, the type of clients that they were achieving, as well as the way that they were delivering their products, services. So kind of working with the vendors to adopt some of these analytic solutions and digital platforms that were more personalized for either their industry or their specific business challenge, help them to deliver greater insights and tie back to the value and trust for their own customers. Moving on to the next slide, there were some trends ongoing and some predictions that we wanted to talk about a little bit as the management consulting vendors kind of shift their client activities as well as their own strategy evolution despite wherever they are currently in the market, and they're refocusing their efforts. So the first trend I want to talk about was restructuring. So many of the management consultancies have recently shifted to focus on those product groups as well as software as a service and managed services business units. So they're looking to kind of create that complementary group to traditional consulting and not just a completely different area, but kind of finding ways to work together. Restructuring to make that happen is definitely taking time for each vendor, and they're not moving as quickly, or some may not be moving as quickly as others. The pace kind of changes when looking at which types of platforms and technologies are more significant for different vendors, as well as kind of shifting those traditional roadmaps and creating new business cases to solidify their positions there. Scale is not necessarily, or scale within the management consulting space in general is not quite as relevant as it would be in some of the other areas. As some of the vendors, they already have some of that existing technology arsenal and the experience to lean on, which can help them move more quickly, whereas some of the vendors, or in other cases too, some of the vendors may have placed their bets in some of these groups before the pandemic and just kind of shifted differently. So the scale is not as relevant as depending on more of the timing and what kind of assets they're actually looking to build out. With talent remaining a top of mind priority for benchmark consultancies, many have been appointing new leadership, whether it be from general attrition or if they're looking to pursue different go-to-market efforts in regions or industries, as well as P&L changes to align better with the industry evolution as well as business simplifications. And the need to manage some of this risk will be addressed through some of these shifts with the profit and loss, as well as some of the new leadership, as they can more easily pinpoint and adapt to some of the changes going on. The next trend I want to talk about was sustainability, looking at it from a management consulting perspective. As sustainability becomes a more core element for clients when they are implementing these solutions, some of the firms have kind of shifted their approach to it, and as opposed to just developing some products that will help identify or respond to or help identify clients' existing position in terms of energy and carbon footprint, and then also looking at next steps to help them improve or change and achieve or even identify their own goals. A lot of the firms have been establishing internal sustainability and energy output goals. So some of them have already achieved their first step, which is a few of them have been looking to just have a net zero and then moving on to actually removing energy from the environment. So they're kind of, to create that value and trust with their clients, they're working basically to the same end that their clients are, which helps them secure that trust and serve more as a go-to for their clients when working on some of these transformation-related areas. And they're using those internal efforts to guide some of those external. And working with partners as well as helping bringing in some of the specialists that focus specifically on energy consumption or water processing. A lot of them are doing that to kind of help reconfirm and make sure that they're creating the most value that they can. The last one here I want to discuss is training and education. Vendors all over are facing challenges to retain and upskill their talent, particularly with the post-pandemic pressures. As everyone is looking for different ways to work, particularly with the shift in virtual delivery and different opportunities from all different vendors, which are encouraging employees to maybe pursue different avenues that they hadn't in the past. Management consultancies are facing these pressures as well. Most of them are investing in additional training and upskilling opportunities to ensure that their consultants aren't discouraged or put out by different technology groups, so they're able to deliver effectively and still work across a different range of digital enhanced offerings. Training is still essential to talent management, and giving these consulting staff both business skill as well as technology is helping them to fulfill that contract development as well as effectively message the portfolio, especially as they are embracing new business groups and different models. A lot of the training now is focusing more on the experience-led training as well as the course material to kind of help them work more effectively and truly understand the different groups that they're working in. A lot of the vendors, I know Deloitte and Accenture have indicated training hours and efforts for hours per employee. So kind of taking the time to dedicate to each employee to make sure that the vendors are getting an advantage and they're truly learning and the dedication is there. It's helping them with different recruiting efforts as well as retention as it promotes the long-term career development and evolution. The firms that are able to provide these training programs as well as kind of show that career progression and show the long-term for them will be more successful in delivering on those business transformations as well as relationship management with their clients, particularly as it is a people-driven business. With that, I want to hand it over to John Costas for the federal IT space.
Great. Thanks, Kelly, and good afternoon, everyone. I'm going to spend the next couple minutes, next couple slides, talking about our outlook for the U.S. federal IT market. We track 13 companies, essentially at the top of the market of technology and technology services. The aggregate revenue for those companies is illustrated here over the last four budget cycles, and then the picture for 2021 is still to be determined. The earnings season for the federal IT market just kicked off this week, so we have some preliminary results, but we do have some projections for the year. And I wanted to spend the first couple of minutes talking about, just setting the backdrop. What have we seen over the last couple of years, and what have the drivers been? And looking back to 2017, really 2017 through 2019 was a period of significant merger and acquisition activity, and that was the primary tailwind behind the spectacular growth rates that you see here. Was the federal IT market itself growing at this pace? No, but the companies that we were tracking were making not the overall volume of M&A activity was not only high, but the number of strategic acquisitions that companies were making, SAIC and Agility, General Dynamics Information Technology, and CSRA. Those are the big examples. And then in 2019, Raytheon purchased United Technologies. That had a smaller effect on their what they do in federal IT, but it was still substantial. Those acquisitions, the integration of those acquisitions, as well as the smaller ones that were made during the time, has continued to wane, and the market really hit the trough, coincidentally, with the COVID-19 pandemic in 2020. But we have seen a pretty robust rebound from COVID-19 that has been it's been somewhat idiosyncratic with respect to certain vendors. Some vendors have recovered much more quickly. Those vendors that have larger footprints in the health IT and federal health IT seem to do better than those vendors that were less diversified or not diversified into federal health IT. But overall, we see the market improving, especially as the initial data has started to roll in. It's still overall a fairly robust market. There's a lot of investment that we expect in emerging technologies, and I'm going to spend the next several minutes talking about where we're seeing those investments. I really anticipate two overarching trends that will govern federal IT spending over the next couple of budget cycles, or at least until a new executive group replaces the Biden administration either in 24 or 28. And the overall budget and IT investment priorities are rescripted as they were when President Biden took office last year. First, the Biden administration has made no secret that it's going to heavily promote cloud adoption, noting in particular that they have how the use of cloud technologies enabled federal agencies to shift to remote work very quickly during the pandemic while ensuring mission continuity. That varied across the civilian, defense, and intel sectors, but overall, the value of cloud, at least from that perspective, was certainly driven home. And so, as the cloud foundation is established, as the establishment of that foundation accelerates, I expect to see other technologies, AI, analytics, big data, being layered on top of the foundation to digitally enable agency missions across all three segments, civilian, defense, and intel. The second major trend that I see, and this kind of alludes to a comment I made a moment ago, the Biden administration, and this is a clear priority shift from the preceding administration, they've indicated that civilian agencies will see significant budget increases while defense spending is likely to at least slow or even flatten during the next 2, 3, 4 budget cycles. To illustrate this, we look back to the discussions and the debate around the 2022 budget request, which initially called for a 16% increase over 21 in non-defense discretionary spending, but there was only a less than 2% increase requested for defense programs, and most of that was intended to cover pay increases for service members and the civilian employees who support them. So with the expectation that defense budgets the growth of defense budgets will slow or even flatten, contractors have been pivoting to the civilian sector to capture their share of what is expected to be a surge in civilian IT investment. We've observed this playing out in the form of acquisitions, vendors forging new alliances or expanding existing alliances with commercially focused IT vendors, particularly in the cloud arena, as well as what we've observed in terms of the ramp-up of internal organic development of solutions that will enhance, for example, areas such as citizen services for more citizen-facing agencies in the civilian side. So in short, we expect cloud will be and will remain the dominant technology in federal IT over the next 2 to 3 years, likely, in my view, through the entire first term of the Biden administration. I mentioned how this was sparked in large measure by the recent pandemic, and we're finally starting to see more energy building around cloud adoption. It's taken years and years and years to accelerate the adoption. I mean, the business case had already been made, but for example, establishing FedRAMP certification programs was an extremely long and protracted process. But now, driven in part in large measure by the pandemic, and by the pressure that's being put on agencies by the Biden administration, federal IT decision makers have much stronger commitments than I've seen in the last several years to advancing their cloud agendas. So given that we expect cloud to predominate, and let's move forward to the next page, please. Given that we expect cloud to predominate over the next several federal budget cycles, I wanted to talk about what some of the specific cloud-related areas where we expect to see significant IT investment on behalf of federal agencies. Concurrently with cloud initiatives, the focus of federal IT decision makers will not shift up the stack so much as continue expanding up the stack to include many of the aforementioned technologies, AI, analytics, big data, other emerging technologies, 5G is another on that list. And this outlook is based largely on the observations that we've made regarding what kinds of capabilities federal IT vendors are acquiring, aligned to augment in their own portfolios or developing themselves. Security is and will remain an overarching strategic concern for all federal IT initiatives, particularly those in the defense, intel, and classified areas. And cloud is still really, even with the acceleration in interest and commitment and, to cloud adoption, it's still in many cases, business varies agency by agency, but it's still in its nascent stages. But broad-based, more than I've seen in previous years, broad-based thinking and planning is really starting to happen now. IT decision makers and agencies have to establish the right base for cloud migration, both from an infrastructure and IT infrastructure perspective, as well as crafting a realistic migration strategy. These are increasingly becoming the critical early stage concerns, and the federal agencies are turning to their IT, their partners in the IT vendor community for assistance in this regard. I can't overstate the importance of establishing the right migration strategy. What are the right times, for example, to introduce native elements into a new cloud infrastructure? Security discussions are absolutely paramount. Another area that I can't overemphasize the importance of. Other areas like ease of use, both internally and then with regard to, for example, citizen engagement, are also increasingly important concerns. How to plan for sharing increasingly democratized data is an issue that needs to be dealt with. Things like IoT environment management is critical. So these I expect to see over the next certainly during 2022, and as we get into the discussions around the upcoming federal 23 budget, certainly the federal 24 budget. These are all issues that are going to take center stage. So one might look at the federal IT market and the emergence of cloud, finally the more momentum and energy around cloud adoption, and say, does this represent a potential threat to traditional systems integrators? And we've seen some of this on the commercial sector. We've seen some of this on the commercial side where some systems integrators have been displaced by cloud technologies. But I think the short answer to that is no, for a couple of reasons. First and foremost, the long-standing mission expertise that federal IT contractors have. And this is a huge advantage for them over commercially centric vendors, including the cloud leaders, Google, Microsoft, AWS. The legacy federal IT vendors, the legacy systems integrators in Fed IT, deep knowledge of and experience with the still very protracted and often onerous federal procurement process. They're commercial vendors they're commercial partners that want to ride their coattails in the space, really need them to, in a lot of ways, guide them through the process. Hold their hand and walk them through the procurement process. Many of them have been doing it for decades and decades. They have a deep understanding of how to navigate it. They have the team set up, and they have to function as kind of the big brother to their commercially centric IT counterparts. I've also seen as these advanced cloud and other technologies have become more prominent, I've also seen the legacy integrators ramping up training to upskill their workforces across multiple IT disciplines, but in particular, cloud and other commercially developed technologies, or perhaps I should say, technologies that have been really honed on the commercial side by their partners. I'll mention once again the accelerated internal and external build-out of next-gen technologies. Some other areas, including metaverse, digital twinning, blockchain, 5G. Zero trust is something that will be discussed, for example, I expect I've seen more activity around that area. It's something that will be discussed in many of our upcoming reports this year. The Biden administration has also stated that they want to increase contracting opportunities for the SMB, the small to mid-market IT and overall contractors. They want to increase contracting opportunities by 50% over the next 5 years, although some insiders have looked at this goal and said it's a bit too wide-eyed, it's a bit too idealistic. But still, there is going to be an increased focus on extending opportunities to the small business and mid-market business communities, and that's going to put more pressure on the top of the market, the folks like Leidos and Booz Allen and SAIC. to really get better at being better partners with their small to mid-market counterparts. Human capital management issues will remain a critical concern at the among the agencies. They will be looking for advisory services and related technology solutions. How do they get top IT talent? How do they reskill existing workers? From the vendor's perspective, it's also a concern. Are there human capital related solutions that they themselves, and they have done this in many cases, that they themselves have developed for commercial clients or for other clients, or have implemented internally that can be repurposed and redeployed for government agencies. And then finally, I expect to see outcome-based or outcome-focused, rather, AI-enabled systems designed to meet the needs of predictive government taking more, or becoming more prevalent during 2022 and 2023. Data is really the new currency. Concerns will have to be addressed as to where data is going to sit, who will have access to it. These issues are going to have to be dealt with up front. Those discussions are happening now. The value propositions around AI must address not only cost in addition to the enhanced computing power. What are the outcomes going to look like? How is citizen engagement going to be improved? How are agencies going to be able to fully utilize the tools that they're going to spend millions and millions of dollars on and try to find some way to make those budget allocations within a very constrained budget environment. So being an advisor for federal agencies will be critical. Being able to not just talk about the tech, but to be able to connect the technology to agency mission is going to be critical and increasingly important over the next several budget cycles. So with that, I'm going to hand the presentation back to my colleagues on the commercial side.
Thank you, John. Thanks everyone for joining us today. So Kelly and John all spoke about vendors' new skills initiatives and the need for reskilling talent, really to address that ongoing war for talent. On the next couple of slides, we wanted to click down on some of those specifics and more direct impact on vendors' global delivery strategy. So the graph we have here on the slide is a real time view from over the last 5 years from our global delivery benchmark, and it's a good illustration of the broader market trends, where vendors accelerate their hire initiatives to ensure they don't leave any money on the table. It's really a cloud-enabled digital transformation opportunities have picked up. And as you can see, after a slowdown in hiring in 2018 and 2020 time period, in 2021, vendors accelerated the recruiting in both onshore and offshore locations, with growth in the latter outpacing the former. Vendors really strive to take advantage of remote delivery as well as a larger pool of potential recruits in countries like India as well as in Southeast Europe, among others. These trends triggering implications, as you might imagine, in the future of vendors' global delivery models, especially as automation has now become table stakes and is less about differentiation and is more about creating a buffer of increasing costs in service delivery, specifically wage hikes. Some of the market drivers we have outlined on the left here to account for on the left of the slide, and these have really served us as a foundation of our thinking for 2022 predictions. So with that said, let's take a closer look at what these predictions are and how it all ties together as services, as my colleagues already spoken about, remains people business. Next slide, please. All right, so the first trend, kind of a bold statement from the get-go, robots will hire each other, which really is complicating the people part of the global delivery. The bold statement, as I said, no doubt, but what do we mean by that and what triggered our thinking around it? What we saw with the trend has really been the AI-enabled platforms increasingly determining which tools will optimize the software asset deployment. Assessments have begun leading directly to procurement, further eliminating the human role. The driver, as I mentioned, earlier, the automation has become table stakes. We saw being a plateauing in 2019 and saw a resurgence in deployment and expected benefits during the pandemic. Adoption of refinement and refinements have led to more robust and applicable automations across the greater spectrum of outsourcing services. And we see that in the performance of some of the vendors. What the result is robots are hiring robots. That's kind of like the way we put into stakes in the, today for 2022. And I believe that trend will continue into 2023 and beyond. AI-enabled tools and platforms that are making purchasing, deployment, and evaluation decisions with human oversight, but not human intervention. And automation is getting pretty closer to the promise of fully eliminating the routine administrative tasks while beginning to optimize process autonomously. What's the implication for IT services vendors? That's the bigger kind of a billion-dollar question here. For IT services vendors, robots hiring robots really presents a three-edged sword. At the time when attrition is top of mind for HR departments and hiring continues to be challenged by pandemic protocols and restrictions, automation assets can sustain productivity and ensure clients continue to be served, which is the key focus. Yet, clients will continue to evaluate their services contracts and likely seek reduced terms as the sheer volume of people deployed slows while the number of robots swells. It's really that's the kind of promise, long-term promise. The third piece, kind of twisting one more time, is IT services vendors will see margins improve, even if total revenues per client fall, as robots cost less to maintain than people, at least in the short term. In the long term, we still somebody needs to develop those robots and maintain it. So we see that maintaining robots will become a trend in the next 5 years. Moving on to the second prediction, which in our view really flips the traditional global delivery model upside down. Get paid for what you do and not where you live. It's not a bold statement, certainly a controversial topic. The discussion that has started picking up attention among both vendors as well as the enterprise buyers. Should employers pay their staff lower wages just because they relocate in lower cost hubs, or judged by the value that they deliver? So it's certainly a question that many HR leaders are facing today. We will not be exaggerating to say it could be the most significant shift in the IT services talent model since the advent of offshoring. Vendors for years made their existence of delivering services from offshore because they were better priced. As teaming software and project management improves and skill certifications become more rigid, verifiable, and transparent, HR departments will be more willing to hire from anywhere. That requires a leadership thinking, changing the leadership. IT services vendors will also need to adjust culturally to the implications that a person should be compensated almost completely on their skills, capabilities, and experience, regardless of their physical location. What we anticipate is IT services vendors will financially reward employees for maintaining some proximity to colleagues, which would allow for more in-office or shared working space arrangements and the business culture benefits that come from in-person interactions. Think about all these new hires that you have to bring them up to speed on the culture. But IT services vendors will likely frame the extra financial boost as a bonus of being close, not financial compensation for living in more expensive cities. IT services vendors that are able to overcome the cultural changes and the fast-tracking hiring from anywhere will significantly disrupt the offshore model. It's a big disruption, as we said, especially with the legacy IT services vendors. So what we see is new competitors, including startups, or the HR departments of the Amazon and Google that are building their services arms, might be the first to adopt such models as they're currently architecting their global delivery capabilities that will align them with more of their workforce of the future. With that said, we've also already seen some of the legacy vendors like Infosys rolling out skill-based compensations that will initially target employees at the bottom of the pyramid and serve as both a retention and risk management tool, allowing Infosys to continue to grow revenue profitably. We anticipate this model, if it proves successful, to be deployed at a company-wide level as attrition remains the most imminent threat to profitability for not just Infosys, but for pretty much every IT services vendor. So something to be on the lookout for. And then the third prediction, which is probably more imminent and impacting vendors' resource management strategy and value proposition on a day-to-day basis, the ongoing war for talent and the rising attrition. Is it truly a zero-sum game where the loss of one vendor is a gain of another, or are there any disruptors the legacy vendors need to account for, as well as understand their value proposition? Tesla will not displace TCS. in the outsourcing market. But Tesla's spend on IT support, like many other enterprises, increasingly depends on software for differentiation, or will diminish as it seeks to recruit software developers and keep talent in-house. In the near term, these new entrants and disruptors into the talent wars will diminish the human capital management challenges for IT services vendors. Some enterprises will likely develop in-house capabilities to the point that they are able to monetize their skills and IP into service offerings adjacent to their core business. So to think about it, if Tesla can build batteries for Ford, if they can sell autonomous vehicle software too, it's something to be on the lookout for. In the long term, though, the implication for IT services vendors, they'll maintain their business value to clients. The vast majority, which will not rely on software as a critical business differentiation. As we mentioned earlier, automation especially is not about differentiation, it's about buffering additional costs. But in 2022, IT services vendors will need to become more creative in attracting and retaining software talent or becoming highly adept to the leveraging of previous two predictions around automation and talent base anywhere. So one more thing to look at in that last prediction is the developer communities and the rise of the platforms like GitHub and GitLab, which they may become substantial disruptors, given that they're increasingly becoming the go-to places for software engineering talent that seeks better work-life balance. The gig economy phenomenon is not new, but given the current moves and the ongoing shift towards hybrid work and work from anywhere, the implications around workforce mobility and the associated tax code changes could be make it or break it for those developer platforms. We believe, though, these developer platforms and the rise of the open software pose a short-term threat to the traditional IT services model. In the long term, broader tax implication is required, to scale and kind of put some more pressure on the work from home anywhere. An implication that really will create further complexity, or perhaps the opposite, more clarity around the second prediction where the vendors pivot their HR strategy from pay by location to pay by skill. So with that, I'll turn it over to Patrick to wrap up the presentation and see if we have any questions on the line. Patrick, over to you.
Excellent. Thank you, Boz and John and Elisa and Kelly. And I just want to show everyone, before we get to one last round-robin discussion, I just want to show everybody where this comes from. So this is the coverage that Elisa talked about in the IT services benchmark. You can see the depth of data and the range of coverage that's in that particular benchmark. Here's what Kelly talked about in the management consulting benchmark, 13 vendors there, a lot of them that we profile in great detail, and we cut across both industries, or I should say all three, service lines, industries, and geographies in the management consulting benchmark, plus a ton of different metrics. In the public sector IT services benchmark, you can see here, those vendors are a little bit different. There's some overlap with vendors that we have in other places, but for the most part, those vendors are unique to this particular space. And again, you can see on the far right, just an enormous set of metrics that John Costas puts together every quarter. And let me stress that this is a quarterly benchmark. The IT services benchmark is quarterly. Management consulting is semi-annual. And then global delivery is also semi-annual. There you see the companies that are covered in the global delivery benchmark, as well as the metrics that are in there. So with that, I want to do one more thing before we take the questions that are in the queue, and that's kind of go around in reverse order of how we presented and just give us a sense of, who is the vendor to keep a close eye on in 2022. In your particular space, who is it that you think is going to either be the most disruptive, grow the most, change the most over the course of this coming year? So let's go in reverse order. Boz, then John, then Kelly, then Elisa. Boz?
Sure, and I kind of hinted a little bit as part of my presentation about Infosys. I think they are all right. They certainly have put their bets in the right place in the last couple of years, 3 years, with the leadership mindset. So they know what they do well, they know what they don't do well, which is always half the battle. I think they will continue to grow and continue to win mind share as well as wallet share, and we see them closing revenue gap with their closest competitor, Cognizant, probably in the next 18 months.
This is John Costas. I would keep an eye on the federal IT market. I would keep an eye on, in general, the companies that have the largest footprint with the DoD, but in particular, Mantech. Mantech has historically, traditionally, been a very defense industry-focused vendor, and I would expect that they would have the most difficulty executing the aforementioned pivot from defense, or at least diversification from defense, into the civilian sector.
Looking at the management consulting space, I would say a vendor to look for after is probably BCG. I think their approach to talent management is quite strict compared to some of the others, and they're very attentive to the review process and ensuring that they have qualified talent and that the right people are in the right place. A challenge that they have is kind of their image in front of clients when looking at the technology space, but focusing on that talent piece as well as using its subsidiaries, its technology-oriented subsidiaries, will really help the firm to kind of navigate those pressures and make sure that they can deliver on the areas where they need to. It will help them to compete a bit more effectively against their peers. Elisa, any thoughts?
And the last on the list, from an IT services perspective, I think the vendor to keep a close eye on in 2022 will be the new IBM Consulting that emerged from the spin-off of IBM's infrastructure services activities into Kyndryl, essentially leaving the new IBM Consulting. Yes, a smaller size vendor, but no longer having the drag of declining infrastructure services revenues, moving more into the hybrid cloud and AI space, aligning with IBM's overall growth strategies, hopefully more flexible and nimble. So really looking at using advisory, digital design expertise, and application service capabilities to build those hybrid cloud environments for clients. So it will be interesting to see how the company progresses. It already reported a good growth in the low teens. So going forward, it should probably continue growing.
And since I get to look at the entire space, I get to pick two, and I would say the two that I am most interested in keeping an eye on this year really are Kyndryl, the spinoff, to see how they perform, and mostly to see what the reaction is from their direct competitors in the market that we cover, and how they're able to find their own place and their own footing, and what kinds of changes others make. And then I think the other company worth keeping an eye on, it seems like every couple of years Accenture does something that allows them to leapfrog and to grow even faster than their peers, and despite their mammoth size, it's just pretty amazing. So I think we're probably due for another change from Accenture, another new surprise. So we have time for a couple of questions, so I'll read this one out loud, and then I think Boz will probably take the first on it. And the question is, you mentioned delivery past trends in global delivery. Given a number of recent topics of supply chain disruptions, decarbonization, travel and border restrictions, political tensions, etc., do your predictions suggest any changes or client requirements more or less different in service providers delivering locally or nearshore versus just more work from anywhere, including global delivery centers? Boz, you want to take the first crack at that?
Yeah, those clients are suggesting any changes in requirements. I think clients, what we have heard from clients directly, is really about make sure that the business continuity is, and quality standards are met. So clients care less about where do you really deliver services, especially on the managed services side. They certainly still appreciate that local flavor, having the boots on the ground. As much as you may be still remote, having like a virtual meeting setting and the consulting side, but if you are in the same zip code, in the same region, in the same time zone, certainly helps on the consulting side. What clients are putting a little bit more pressure in terms of looking into the future, given all the disruptions that were mentioned, is how well services providers manage their partner ecosystem. How well they're able to fit and play with each other. How different they partner. And they're starting actually to, shifting the requirements for managing the partner ecosystem from the consultancy and system integrators more to the hyperscalers. That's one thing that we have started observing in 2021, anyway, something we're keeping an eye on for in 2022 and beyond is buyers are asking, soliciting feedback, either for recommending or confirming which service providers they should be, choosing, they should be working with. So kind of like asking AWS, what's your preferred SI vendor? What's your preferred managed service provider? And so on and so forth. So it's about managing partner relationships differently, aligning capabilities to industry knowledge. Those are things that will stand out and something that will make a difference to the buyers. It will be less so about where the services are being executed from. Again, the engagement side, the front end, there's still some that nuance of understanding the local culture, affinity, and the local culture needs, but the global delivery capabilities are, I think it's about quality, and the broader trend is about managing the ecosystem. I'm not sure if anybody else on the line from my colleagues has any other opinion to share as well.
Alita first, and then Kelly, if you have anything else to add. John, we'll go last with you, and then we'll wrap with Haley.
I think Bob touched a lot of important points. I think it's, for me, really the cultural affinity and proximity to the client is a leading driver. We're seeing a lot of the vendors moving into more geographies to be closer to the clients, to have that local market presence. Asia Pacific is a good example of current acquisition activities going on. So vendors can get more people on the ground to be attractive to the local market. So to me, that's really a key point.
Similarly, a vendor to look at in this space, I would following a lot of their supply chain challenges that they had, and just their overall strategy shift in general. They have been reevaluating their global delivery footprint, and I think they're getting much better at using the resources they have and kind of identifying what works and what isn't really working. So I think Bob and Lisa, I think we're quite eloquent with it, but it's definitely shifting kind of in how they're delivering and where they're trying to deliver, so kind of changing that scale quite a bit.
And Kelly, that was Fujitsu, you said?
Yeah, Fujitsu.
Okay, thanks. Okay, John?
Well, in federal IT, global delivery is it's kind of a non-factor. However, low-cost onshore delivery has been a factor for a while, and I expect that with the expansion of the federal IT workforce outside of the DC Beltway, vendors are looking for more talent, for example, that resides not only in the immediate area outside the DC Beltway, but they're looking across the country. They're looking at areas in the Northeast. They're looking at Silicon Valley. They're looking at areas in Texas, the so-called cyber corridor between Dallas and San Antonio. You're going to see more service delivery, and obviously this is being driven in part by the migration of the workforce into distributed work environments. You're going to see more service delivery happening from outside the DC Beltway, not only because of the aforementioned factors, but also because workforces prefer to live in lower cost areas outside of the urban work areas. So.
Excellent, thanks. Really good point on that, too, that it's global delivery, when you're talking about federal public sector, really is global within the U.S., if that makes any sense. Haley, you want to just wrap us up when we're all set?
Yeah, all right, everybody, thank you so much for joining us. Please feel free to reach out to the team with any follow-up questions. If you have a few moments, it would be greatly appreciated if you could please fill out the survey that's going to pop up on your screen. A replay version of the webcast will be available after the event and will be sent out to all of you via email. To view a list of our upcoming and past webinars, please visit cbri.com. Be sure to join us on Thursday, February 3rd for 2022 Predictions Digital Transformation. Thank you all, and have a great rest of your day.